Looking for a fast-charging, ultra-responsive stylus for your iPad? Meet the 2X Fast Charge Active Stylus Pen, designed for 2018 to 2025 Apple iPads. Take your creativity and productivity to the next level. Click the link in the video description to shop now on Amazon.
Welcome to Qualcomm Pulse, where we dive into the latest news and trends shaping the future of technology. So, you've heard that the world's largest smartphone chip manufacturer, Qualcomm, just reported a lackluster performance in its smartphone-related business for the third quarter. The company's revenue came in at $10.37 billion, a 10% increase year-over-year, but fell short of market expectations. And that's not all. The adjusted net income was $2.67 billion, which is still a far cry from some analysts' predictions. Now, you might be wondering what went wrong for Qualcomm. The company's smartphone business has been struggling lately, and it's clear that the underperformance in this segment has put pressure on their earnings. But before we get too caught up in the drama, let's take a step back and look at some bigger picture trends. The semiconductor industry as a whole is facing significant challenges right now, from supply chain disruptions to geopolitical tensions and regulatory pressures. And Qualcomm is not immune to these broader industry challenges. In fact, their struggles in the smartphone market are a reflection of these deeper issues, and it's clear that the company needs to adapt quickly to stay competitive. But here's the thing, Qualcomm isn't giving up. They're already diversifying their revenue streams and investing in new growth areas like automotive, Internet of Things, and artificial intelligence. In fact, their CDMA Technologies segment generated $8.99 billion in revenue, an 11% increase year-over-year. And while the smartphone chip business within that segment only brought in $6.33 billion, a 7% increase year-over-year, it's clear that Qualcomm is looking to other markets for growth. One area that's definitely worth watching is the automotive industry. With new technologies and innovations emerging all the time, the demand for advanced chips is going up, up, up. And Qualcomm is right at the forefront of this trend, with their QCT segment seeing a 21% year-over-year increase to $984 million. Now, we know that Apple's decision to develop its own modem chips for iPhones has been a major concern for Qualcomm in recent months. But it's worth noting that this transition won't happen overnight. And due to delays, Apple is only using its own modem chips in the low-end iPhone 16e model right now. So what can we expect from Qualcomm moving forward? Well, their outlook for the fourth quarter is cautious, with revenue projected to range between $10.3 billion and $11.1 billion. And while that's still a pretty wide range, it's clear that the company is committed to adapting to changing market dynamics and finding new ways to grow. That's all for now from Qualcomm Pulse. Thanks for joining us, and we'll catch you in the next video.